Moving on to Article 5, Paragraph 3. This basically deals with what are some of the preparatory or auxiliary activities which are not treated as a permanent establishment under the India-USA Treaty. Now, let's first read it and then we'll come to the explanation. Notwithstanding the preceding provision of this article. Now, what this means is that this particular clause or paragraph overrides paragraph 1 and 2, which means that even if there is a fixed place of business in India, even if it is included within the examples of paragraph 2, if the activities as such are something which is covered under paragraph 3, it would not amount to a PE. Even for agency PE, which you are going to see subsequently in paragraph 4 and 5, if the activities carried out by the agent falls under the purview of these very activities, then also the view is that it should not result into a formation of PE. So, notwithstanding the preceding provisions of this article, the term permanent establishment shall be deemed not to include any one or more of the following. So, either of them or even a combination of them, right, will not be treated as a PE. But if you do one of these activities and alongside you do something else which constitutes a PE, in that case, the profitability of the entire transaction may risk being taxed, right? So let's go through them one by one. The use of facilities solely, which means only. If you're using for some other purpose, exemption is not available. For the purpose of storage, display, or occasional delivery of goods or merchandise belonging to the enterprise. So if there is a foreign company, it has a place in India where it stores, right, or displays, or at times occasionally delivers goods or merchandise which belong to this enterprise. The goods should belong to the foreign company. If it is selling goods from here for someone else, a third party, then this exemption is not available. But if you are doing this for your own goods or merchandise, the exemption is available and such an activity is not going to result into a PE. The maintenance of stock of goods or merchandise belonging to the enterprise solely for the purpose of storage, display, or occasional delivery of goods, right? So one, you are using a facility, maybe an office, etc., a godown, etc. Second, you are maintaining stock of goods or merchandise, right? But these goods or merchandise should belong to the enterprise, and the sole purpose of such a stocking of goods should be storage, display, or occasional delivery. The maintenance of stock of goods or merchandise belonging to the enterprise solely for the purpose of processing by another enterprise. So if there's a foreign company, there's a contract manufacturer in India, right? If the goods are stored here for the purpose of processing by this company, and after processing they go to the foreign company, then such a storage of goods, the maintenance of stock of goods or merchandise belonging to the enterprise will not result into a PE. Again, the fourth one, maintenance of fixed place of business solely for the purpose of purchasing goods or merchandise or of collecting information for the enterprise. So if you are just engaged in the purpose of purchasing goods in India, then it will not be treated as a PE. But when let's again the same thing for the enterprise, if there's a commission agent who procures goods in India for third party, and this commission agent has a PE in India, or he is maintaining a fixed place of business in India, right? In his case, the commission income that he gets will be taxable in India because he's procuring it for someone else, not for the enterprise itself. Or of collecting information. So let's say there are news channels, media channels, overseas one. If they collect some information in India and they have an office whose job is to just collect this information, they will not be treated as having a PE, as long as the information is collected for the news channel themselves. But if there's a freelance journalist over here, okay, and he has an office through which he collects information and then sells it to someone else, then the profits of that person will be taxable in India. The maintenance of his place of business solely for the purpose of advertising, okay, for supply of information, for scientific research, or for other activities which have a preparatory or auxiliary character for the enterprise. Now, what this means here is you need to see the nature of business of the foreign company, see what are the other activities which are being carried out. Are these activities vis-a-vis the nature of business of preparatory or auxiliary character? If yes, they are excluded from the definition of the PE. So let's see some examples or some facts which needs to be considered. The nature of activity vis-a-vis business of the entire enterprise. If the activity is such that it is of revenue producing character, right, then they are not considered as preparatory. The reason why these activities are excluded is because it is believed that their connection to the income generating activity is quite remote. It's not direct, and therefore even if one were to try and put together some attribution, it would have been very, very minimal. So the contracting states actually decide that in such cases they are not going to exercise their right to collect taxes. Whether it's a cost center or revenue producing activity, if it's a cost center, obviously not a PE, could be a preparatory or auxiliary activity. But if it's a revenue producing activity, it cannot be clubbed under. Now, one of the most controversial and on which you will find a lot of cases is whether a liaison office constitutes a PE in India or not. A liaison office typically is supposed to work under a defined framework. They are supposed to be liaisoning, which means that if there's a customer in India and there's a head office outside India, their purpose is to act as an intermediary between the two of them. They are not expected to be signing contracts, negotiating sales order, right, and doing a lot of other things which a branch or let's say a subsidiary of a foreign company would be doing, which would amount to revenue producing activities. But in many cases what is happening is that people have opened liaison offices and then they are running full-fledged businesses out of it. In those cases the tax office came down heavily, and there are a lot of cases where it has been held that even a liaison office could be a PE. But at a broad level, let's see what are the criteria for ascertaining whether a liaison office will constitute a PE or not. So what is the nature of activity of the liaison office vis-a-vis the activities of the head office? If it is preparatory or auxiliary, no PE, but if it is revenue generating, a PE could be there. What is the process which is followed for negotiation and conclusion of contract? Right? Is there a standard catalog which the foreign company has provided, right, which is conveyed by the liaison office to the customer? Or is it that there are broad parameters which are given by the head office, the detailed negotiation and the conclusion of the contract is done by the liaison office? If the negotiation and conclusion are done by the liaison office, it will amount to a PE. Role of the liaison office. Is it just providing information on product and addressing queries which are routine in nature? Is it addressing the queries directly, or it is going back to the head office for queries which are significant to the conclusion of the contract? Whether it takes the decision itself or it communicates the customer feedback and the decision of the head office back to the customer, who signs the contract. Let's look at an example here. So there was a foreign company which had a liaison office in India. There were certain customers who wanted to remit the money to India. So this foreign company used to collect money from the customer, right? And it used to send a list, upload a list on its server wherein it used to mention who are the intended beneficiary of such money. So FCO collected funds from customer overseas who were interested in remitting money to India. It had a liaison office in India which downloaded information by connecting to FCO's server, made checks, and handed these over to the recipient. The issue was whether the LO constituted a PE in India. The Delhi High Court has ruled that no such PE arises in this